Annual report where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we'll talk about a number of things, but how the indexes are still struggling here. NVIDIA looks like it's coming back, and we'll cover some other stocks tonight. I haven't done any stocks for a while on the channel, so let's get into tonight's video. Well, folks, another late live stream. I'm glad to be here. Was not able to do one yesterday, so we'll see if we can get 3 more in this week. So, interesting markets that we're seeing. We're seeing a little downward pressure. It's been kind of a pattern over the last couple of days. Is that the overnight action? We see some profit taking after struggling all day. There was a bit of a surge at the end of the session, and here we are pulling back again. We're just struggling right there. The S&P cash was able to render a new high. So we're eking out at least some new highs, but we're still got an awful lot of resistance up here. So a couple of things that I want to talk about in tonight's video. And one of them is going to be just going through NVIDIA. Notice it's starting to come back alive again. And the AI story isn't going away anytime soon, even though there's a lot of naysayers out there that want to discount the whole AI movement. And I don't think that's going to work out for them very, very well. And I also want to dig into a couple other stocks. And if we have time, depending on how long I get into things, we'll talk. Maybe I'll bring you some stocks that you folks want to ask me about. So don't give them to me now because I won't see them in the timeline. But just I'll give you a hour once we'll see how tonight goes. As always, I'll try to keep this into about an hour and just see how everything flows here. So a couple things that I want to talk about. I went through, I believe it was a couple of nights ago, and this Fed meeting is just in the back of my head yet. Like, none of it makes sense. It doesn't appear that there's things that are going to make sense. I'm hoping that we don't get doggy bark, so bear with me because I am actually working at home because of a personal situation. So anyway, what we're looking at here is the Fed lowered rates by 50 basis points. I know during the live stream on last Wednesday when this happened, people go, Bob, how did you get it that wrong? And how I got it that wrong is that those 50 bips of declines are usually saved for like a crisis. I'll do a air quote, a crisis. And there was no crisis. Markets are at all-time new highs. There was no reason to do 50 basis points. Now, I could have justified it and did talk about it in the Substack newsletter about how the back end of the curve adjusted, and just to get things closer in the line, that would make sense from that standpoint. But the realities is that there was no real reason to do it, except for there was maybe an emergency, a political emergency. So I'm going to go down this, not a trail of any kind of conspiracy or anything like that, but I do think that what the Fed did, and I had so much faith in Jerome Powell that he was going to do the right things and not become political from that standpoint. And man, did he didn't do it. So he succumbed to the pressure. Now, I just recently, let's see if this will come up here. Yeah, so I got this book, Chairman of the Fed. I am just started reading this book. I'm really intrigued by this. This guy, William McChesney Martin Jr., was probably the best. He was an epic Federal Reserve chairman who basically brought full independence back into the Fed again. I thought Powell was that guy, but I guess we should have known based on some reports and some whistleblowers and other things that have been around any of the government agencies, but specifically the Fed, that has come out that Powell doesn't really like Trump, and now he's in the crosshairs, right? So if Trump does win, he's out. So we'll see how that works out. But the the reason why I bring this up, I think it's really important. What we've been seeing across the board, is that we're seeing a crumbling and a dismantling of the entire integrity of the U.S. system. And I won't go too deep in here because I could spend a couple hours talking about this. But what I mean by that is the government agencies, the reporting, the miss on 818,000 jobs that were reported wrongly. They don't exist. They never existed. Meanwhile, GDP and all the other calculations somehow still stayed the same. No, they didn't. They didn't adjust anything. So maybe behind the curtain, back in my old trading floor days, there was a buddy of mine used to always go. We worked in a pretty big pit, and the arbitrageurs would come in, and he'd always say, "Do not pay attention to the man behind the curtain," which is referencing the Wizard of Oz, where he's moving the nothing's real. He used to say, they're manipulating things. This will go away. Well, that's what we're seeing across the board on just about all the metrics. So I'm still struggling after that. Initially, it was the take all the oxygen out of the room when that event happened, and then it's just I don't know better. It's sort of like somebody's been unfaithful to you, and now they're sorry, but you can't hear them anymore, right? That's what it feels like. It's like, okay, there was this moment where all of a sudden the integrity really was bad. There's one thing about seasonal adjustments. It's another thing missing almost by 1 million jobs and not adjusting any of the other metrics. Somehow magically everything stayed the same. So one of the things that I believe we're also being gaslit about, and that seems to be a popular report. So what I'm doing right now is I'm just bringing something up on screen that a chart that I put in the other day. So let's just go over to this right here, and I just want to talk about this chart because I put it in the Substack the other night, and I think it's worth so you understand what it is that I was doing here. Is I took all of the different angles of the trends that were in different periods of time. So this yellow line was the trend literally from I believe it was the 1970s, and this was the angle of the growth, and this is the PC consumption number. In a minute, I'm going to bring up something a little, I'm going to bring up the year-over-year numbers, and I'm going to show you how we tend to think, somehow inflation's slowing down. It is not, okay? And that's what I want to make this clear, that this is the purchasing, the debasement, the purchasing power of the dollar is basically going to zero over time. We all know that. We continue to kind of operate into this world that we accept things. And I've said this before, that it appears that a lot of times we kind of get normalized into an environment thinking about how things are. And now it's just become right on the edge of ridiculous on just about every metric that we're looking at. So let me break this down. So the cyan line here, this blue line, is actually the next trend, which was around 1995 and the angle that it was coming through 2008. And you see we got the 2008 crisis, and basically it took, with pumping all kinds of money back in, it took us almost up to 2019. Remember when we went through multiple years that the Fed was talking about how they can't get inflation over 2%. We want it to 2%. It was at 1.2. We needed it 2. They're hung up on this 2 number. And so the 2 number was to get that angle on the blue line back in play. Then we get the pandemic, right? Then we get this big drop over here, and I think I can draw a couple things in on this chart here. But we get this big drop here, and then they pump in the big money, and then this red line here. Let me just see if I can. I'm going to try to blow this up so you all can see it a little better. wrong line. We'll get this one. Hang on. So yeah, so I'm just going to make this big fat red bar here. This is the new angle. So this is the new inflationary period. And I've actually got our algos running on this as well. So if I come in here and you can see, I'm going to move some things out of the way here just for a second. But this from about where you see the red dots coming in, that's the red dot predictor that I always use. This hasn't happened yet, but the angle that this is rising at now is the new inflationary period. And I've been talking about this for a while on Substack. I bring it up on YouTube when I'm up here a lot of times. And what I talk about is that there's going to be an echo bounce in inflation. And, Powell's acting as if inflation's all better. And it's different when you look at these raw numbers. So we could break down any metric here. We could take the CPI. This just happens to be that I could spend a whole hour just going through all these metrics. But the bottom line is this: when you start looking at the pure numbers and the growth in the numbers, our mind gets skewed thinking about the year over year, month over month numbers, and we lose track of what I'm showing you here right now. And so the inflationary scenario is going to continue. And we can spin the clock back. You could probably, if you dug through some of my old videos that I did back in 2020, 2021, as one of the things that I talked about back then when we were starting to see the big acceleration in inflation, is one of the best inflation hedges is the S&P 500 or the equity indexes. And so this tells me that we're probably going to see higher prices. It does offset a lot of the impact, but not everybody has stocks, right? But this has been an area that I've talked about for a long time. This is the best hedge of owning just S&P 500. So maybe Warren Buffett's right. He's gonna, you don't have to be a great stock picker. You just buy the S&P and you hold it forever. Well, that's kind of, from a guy from my standpoint who's a quant and have been trading for as many years as I have, I find that I can't buy into that scenario, but there's certainly something there. And so, this is all forecast. This white line, the dots, all this is forecasted. I mean, this is all the way back. This is out into 2025, but it's still, we're seeing growth in these numbers. So I brought this up. I'm going to do my best to bring up. I'm going to go from here and we're going to go back to here and just see if I can get. I'm going to get PCE up here. But what I want to see this time is I want to see if I can find it. I never can find this stuff when I want it. Bear with me just 1 second. This will probably, yeah, this chart is good. So so this is what it looks like percentage-wise is like it's going to happen. So it looks like, oh, things are getting so much better. But when you go back and you look at this other chart here, and we come back here, the numbers are just growing. They're just growing at a slower rate. And we all knew that. Bob's not revealing some big secret. But what I'm talking about is this is all best way a sham. The numbers, it's all gaslighting. Things prices aren't going down. We know that a lot of things that they say that are, the inflation rate is up at 6% at the peak. No, it was 20. We know that inflation in groceries are, in some cases, I've seen a number of things and everybody's experienced it. If you go back 2 years, your groceries are probably twice as much. So what's the point of talking about this tonight? And the reason why I want to talk about this is that this will be a metric that will ultimately come back into play. And this is why I talk about the echo bounce. I talk about all of the things that is going to happen in the background. But meanwhile, what we're going to do is we're going to go back to this, looking at this inflation rate. This is the Bank of Dallas. This is the trim mean. But I just wanted to get this. This isn't the exact chart, but it's close enough just to make the point to be able to discuss this. So let me just come back up and just go full screen. So I want to wrap this up because this is something I was thinking about. It's been kind of eating at me. I showed this chart in Substack the other day, and I discussed it. But this is like the whole. It looks to me everything is very politically motivated. I think they're. I use the term they're putting, magical fairy dust on the economy prior to the So when we see the numbers, as we look, remember, we're always looking back. So they just lowered the rate. So as we get into the October numbers looking back and the November numbers, maybe the economy looks good. But this also plays in to the scenario that I've been talking about, that we're going to see this echo bounce. So they may have just maybe put some lighter fluid on the fire, and it's going to flare up a little bit when it comes to inflation. So I think I made my point. So all right, let me come down off of that. I needed to say that stuff. I wanted it on the record so that someday maybe somebody watches this video 10 years from now and go, that's interesting. But I brought up a couple things. I brought up Bill Martin, who was the head of the chair for from 1951 to 1970. And I'm going to be doing a video on this. I'm doing a lot of research because I think it's very interesting, because I believe, just to come back into where we are today, I believe that what we're seeing right now is the next industrial boom. I think AI is the real thing. I think we're going to see just a whole evolution of productivity. A whole lot of other things are going to happen that we never imagined. And if you were back in the days of when the rails started and industrial boom and all that, you're going to need some really solid financial backdrop to make this work. And right now we don't have that. We have smoke and mirrors, my point tonight, and we need to get back to the stability, the transparency. We're going to have to rebuild the trust, at least for this old man. I need to know that somebody's making some effort to get some integrity back in the numbers that they're releasing, because until I see somebody come up and adjust the GDP numbers and every metric that's affected by employment and all of the output, I want to see all those numbers, because I potentially think just about everything has been inflated, and therefore we're operating on a false narrative that things are good, and maybe they're not as good as you think. So I'm not about to turn into a super bear and the market's going to collapse or anything like that. But I am telling you that there is going to be some challenges, and things are going to be a bit different. If we do see some changes in government, and we start to see there's a number of good things that can happen, is fiscal restraint and other things that could happen going forward. Maybe Elon comes in and fires half of the government workers. So if you're one of those people, you might want to be thinking about updating the resume. Maybe, who knows? But my point of that is that we need to get integrity back into the reporting, integrity into all of these things, or nothing's going to work going forward. We've done enough smoke and mirrors, and now the smoke's disappearing and we see the mirrors, and it's not a pretty sight. Okay, so let's get into something else here. Let's get into market expectations. Markets have been pretty quiet. We did see, and I'm going to go through. I'll go through our database because I have the output. I'm going to write the Substack newsletter. I keep telling everybody, get the Substack newsletter and do that, because you're really looking at a lot of work that I put in. I actually toned it down. I believe Monday there was 4,400 words. It was so big it won't fit in an email. So you have to go to the Substack app or to the Substack website to get the full report when I go crazy with all the numbers and charts and all those things. I think as we just real quick as we go through the rest of the week, I'm just looking at my other screen because we're down 1150 now in the futures, so we're seeing overnight pressure. We're back to 5780. This is around where we got last night, and we rebounded on everything. And I think that we're going to see this choppiness, and we're at a point. I'll go through the database here in just a minute. We're at the point where we're likely to see a bit of a rejection and pullback from here. I made this title of this video talking about NVIDIA. I'll show you NVIDIA, and I won't do a spoiler alert. I'll go through it from that standpoint. But we're just seeing a number of things out there that are really starting to crop up. I'm just looking here. So we actually had a case shower comes in at 5.9. So we're still got real estate, even though activity is slowed down. We got it expanding at 5.9%. We've got we saw a little softness in the consumer confidence. There's some things starting to show up that are going to be questionable as we go forward from an economic standpoint. But listen, all bets are off right now. We're about to come into October, and we're literally less than 6 weeks out to the election. So the focus is going to change. My general scenario has been that we will see a bunch of things change from the standpoint of how the markets are going to start to respond, and there's just nothing there. So let's go ahead. I'm just going to come back up here and get a chart ready to go. Let's go over to the database. We're still on the short-term database here at 71.59. We actually had 368 new buys, 269 sells, so we had a slight positive coming in to the run tonight, but it's at 71%, and there's still only healthcare's a new 7 days old on the sector rotation. But one of the weaker sectors today was financial, and that is likely to come into play. If we look over here, I'll see if I can highlight this so you can see this here. Yeah, so this financial sector, we're 73, the models that I run, we know what typically holding period it is, and typically on average it's 42 trading days, which is a better part of a couple months. And so we're 73, we've extended that, we're overextended, we're got about a 10% return, and this is a very large sector that we're long on. There's probably more symbols in this sector than any other sector out there. So let me just go over here real quick. I just want to change it. So if we come over here to financials, I'm going to update this screen here. There's 548 symbols in this sector alone. So it's a big sector. There's currently 373 of them long, 175 flat, so 68.07 from the standpoint of where the what the holdings are. So we're pretty robust, and the reason I bring that up, this is also probably close to rolling over this index. That might be where the rotation starts in financial, and we also have capital goods is actually extended as well. So I'm watching where the rotation's likely to come from. So that could be the point. If it's financials, those 548 companies that are in there, a bunch of those are probably Russell 2000 stocks. So it's still, like I keep arguing about the Russell, is it's got a lot of challenges ahead from the standpoint of what's going on. But the database is really solid here. When I go back over to this all stats page, the forward-looking part of this is right now we're about halfway through the cycle, which is about 20 more days left in this average cycle. So that's another month, which right now what the, that'll take us into mid to late October. And then we'll start to, as we come in toward the election, maybe we're starting to getting some flattening out. But it is absolutely amazing what's been happening here with the database, and I've been talking about this in Substack quite a bit, just because it's been phenomenal on the positive rotation we had throughout the year. This all started a year ago in October of last year, where we started to see where we had attrition. We got down to, I think, around 40% long, and then we started to see the positive rotation come in. It continued into January. I kept telling you then that we're probably going to see a rally into potentially June, July, and then I extended to September. Here we are in almost September done, and we're October. So this thing keeps extending itself, which is what happens in positive bull markets. And you have to go back 2 years ago. If I'm going to bring something else up on the screen, I put this in Substack, but if I come over here to my watch list here, if I can get the right one up. Yeah, so if I bring up these watch lists here, this was all the major symbols that are out there. You know, I've got the MSCI, the World Index. It's up 30%. And if you look at the entry dates here, these are probably a little tiny here, but a lot of these dates were 2023. So, for instance, this technology index has been long since February 6th of 23. So that's been way over a year and a half. And a lot of these indexes, these are modeling on intermediate, have been long for a while. And a lot of these returns are anywhere from 40 to almost 60% on some of these. On SPY, the last buy signal I had was on January 2nd of this year. So it's up basically 21%, just owning that index, and it's still long. But this is what I'm going to start posting this on probably Monday night on a weekly basis. So if there's any changes to this list, it'll automatically update. And so that's one of the things that you'll be able to do. Okay, so let's get into the analysis. I got through a lot of the metrics that are out there. I got to get my little rant in and complain about how everything's not working like it's supposed to be. And let's get into taking a look at and coming over here, and let's get over and look at go through the S&P and take a look at what's going on here. I'll leave this daily chart up right now, and I just want to point out these red dots. This is what we call the WTR forecast. This is the indicator suite. And by the way, if you don't have the indicator suite, we just are launching. If you want to find out more, you can go to www.kendallreport.com/indicators. You have to right now. You have to put the www in, or it won't come up right. So just know that we're working on. We've had some SSL issues with our hosting of our URLs, but you can go there and find out. We now have rent to own, so for like $37.25, plus you get a 7-day trial on the indicators now. You can rent to own, or you can subscribe, or you can just buy them outright. We've got pricing actually normalized from where we've been over the last couple of years offering this, so check that out if you haven't. But this indicator here, the red dots, as we go here, what we're seeing is a couple more days of higher prices. Whether or not we've already rebounded from a minus 1150 to 850 on my other monitor over here. So we're seeing a little rebound. I don't expect it to go too far out of whack, but we keep inching up, and we should continue up on this daily chart. If we look at the algos, this is where it starts to get a little interesting, because what we're seeing here is we're about to cross through its first derivative, which says we're going to test. That's a signal that we will test the value of the 10-day SMA, right? This is simple moving average. Right now, that's 57.13, and I'm just getting here, it's 23 handles per day. So that's going to be 57.40, and we're currently 83. One more day, we'll be at 57.60. So as we come in, tomorrow's Wednesday, we get Thursday, we could be at a challenge point where we're going to break it down. And I've been talking about this and Substack and everything for the past week, that the algos were predicting this was going to happen. They've been spot on. We're not seeing any big acceleration in PPM2, which tells you the underlying trend is, while it's positive, it's not expanding. And the only last thing down here, the PPM3 is showing it's going to expand potentially into early next week, right, and into October 2nd. But what that means is there's support at that 40. So the 40 is 55, 65. It's starting to, just slightly upslope right now. So 55.5 is going to be the big number. So we ultimately, what we could see happen here is that we're going to see a retracement. We're going to have to get through the 10-period moving average and then stair step down to the 21. And you can see the algos are predicting exactly where my cursor is here. That's where it's going. Let me just see if I can draw this in for you so you can see it. This will be a similar analysis from the standpoint. You can see right here, this area here where the red dots are coming in, it's showing that we're going to come back in toward those moving averages. And you can see right here, we got what I call the inverted V top. This is very choppy here, no real trends there. And then this is the peak on the 40 I'm talking about. So really what's happening is it's just, there's nothing drastic here. Not like it's going to roll over and there's a collapse. It's just going to come back into the moving average. I've been arguing for a while now that we're just locked into this big sideways range. And the fact that we're able to go and print a new high, some of it had to do with the rollover and the premium and the rollover, but we did get new highs in the cash markets as well. So, but I just want you to see what that looks like from the standpoint of the expectations. Let me just draw one last thing in to make a point. You can see the moving averages are starting to all congregate over here, and it's going to bring us in right into this midpoint here. So what we're likely to see going forward is going to be this center line. This center line here, we're just going to start to do some type of configuration up and down. I drew a little high. I'm not saying they're going to new highs, and this is what's happening with the indicators as well. We're seeing momentum dropping off. This is predictive, by the way. This is just machine learning, but everything is being predicted that we're going to see momentum. And one of the things that I'm actually attempting to write a fairly quick memoir and a booklet that's going to, especially if you have the indicators, are going to be helpful. But this is one of the things that we talk a lot, that I talk a lot about in the theory of how I operate in the markets, is that when we see this type of configuration, there is a predictive nature to it, and everything is starting to come into this sideways pattern. But then I do something, and this is one of the chapters, as I talk about it all the time, have for years if you've been around the channel for a while, is I talk about reverse fundamentals. So what that is when I look at this technical picture and I ask the question, and I'm telling you, the best things in life that you ask are, if you ask the right questions about life, you'll get a lot better guidance than responding to emotional. So the question is, if this is going to happen, what would it be? And is there anything out there that we can see fundamentally that is in current looking forward, whether it's reports, Fed actions, what is there out there? What kind of, what I call noise in the markets that we can look at and anticipate? Well, there's the election, so it looks to me, I mean, this is being forecasted. I'm going to draw a line up here. This is November, where I just drew this line, if I can get it straight there. This is out to November. And so this is the window right here. I know I got a lot of lines. So this window right here going between these two lines is that window prior to the election. And then and right now it's too early to get any real predictions, but I'm going to show you one more chart. We'll go on to the NASDAQ. I know I've been going for 35 minutes, but that's okay. We'll keep hanging around as long as you folks are hanging. Yeah, I'm just looking at a couple of comments. Better learn to code. Absolutely. You know what? You don't have to learn how to code anymore. All you need to do is learn how to use AI, whether it's Chud or GPT. There's a lot of platforms coming out, and there's new ones coming that you don't even know about. I've been playing with Grok a little bit, just seeing what they're coming up with. Yeah, so Dan's just asking about, does your predictive software look at options change? We did some. I'm an ex-former market maker in Option Pit, okay, and I've been getting folks to get me to try to put a podcast together. I've got some old buddies that we could sit there and talk options, talk a lot of stuff. But this is one of the things you can do with options, and we used to do this a lot, where we would chart the options. So we could chart, hourly, typically hourly 15-minute charts, and we could trade options off of those. And so from that predictive standpoint, absolutely, it'll give you projections of where the options are likely to go, all those type of things. So that is absolutely it. And by the way, with this new offer that we have out here, we've been busting butt on this thing. This is the coding behind it, mainly because TradingView is so quirky and to use. So you have to have a TradingView account to get the indicators. But you can, like I said, you can get a trial for 7 days. So you can play with them. There's 19 videos course. There's actually advanced courses, and we're working on a mastermind right now. So there's a lot of stuff coming up that we're trying to get out there. But we wanted to give accessibility to everybody. So www Kindle Report. Got to do the www right now. www.kindlereport.com/indicators. And then when you go to the checkout, you have 3 choices: buy them now, subscribe, or rent to own. The best deal is rent to own. And so I think it's 12 payments. It's $37.25. So we made it accessible to as many people as we can, because we've had a ton of emails, people wishing that they could afford them. So we've tried to put that together. But anyway, the whole point is that you have these predictive tools to look forward. And I'm just going to clean up all this stuff and go back here. And what we're looking at here is that everything's being predicted here. So this is what I want to show you next. The weekly. And I mentioned this. Let me blow this up just so we can get a better look at it here. So I mentioned this, and I believe last night's Substack is one of the things that we've seen. We've had really some crazy volatility. If I blow this out just a little bit here, if we go back to July, we had this big decline all the way, perfect hit off of the 40-week moving average, complete reversal. This was, that big run up. We had 3 weeks up, came back down. We hit the 21, the next one, then we get the big reversal again. But what we're seeing in this volatility, and this is really key, the orange line is our market grid indicator. And on the far right, there's small numbers over here where my cursor is that are giving you exact numbers of the ranges and a predictive part of the ranges. And what we see when we see this big, what I call volatility spike, similar to what happens in Bollinger Bands, that there's standard deviations. This is range. This is looking at average ranges and looking back, and you can adjust some of these numbers, actually a lot of the numbers in the indicator. So I gave you the ability which to play with it, because some markets might have a little different metrics. You can kind of tune them in, and then for volatility and for characteristics. But the point is that this big volatility, typically when we get these big swings, it takes a number, in this case being a weekly chart, it's going to take a number of months to normalize so that a trend can happen. And you can see what's happening here is really, just to draw this in, what my expectation is that this market grid will start to kind of collapse in here, and all of a sudden, this is, I'm just putting this out here, this is December, where I've got my arrow right now coming up from the bottom. So I suspect that the markets will kind of follow along this line here. We have this upward slope 10-week moving average, so everything's going to get compressed into this window is what's likely to happen. Now, if you look at, just cleaning this up a little bit, if you look at, really you look at these gyrations, you're getting to the point now, because of this new high, this is most likely is one of these, I got to clean this up, too many lines, hang on. Most likely what we're getting here is you're getting a big formation that is like this big channel. And this has been my argument here. But these moving averages that are coming here, the 10 is going to be dominant. We probably don't get much under the 10-week moving average. And this is going to actually get us to the place where we start to see maybe a challenge, and this is out in December. So this is an interesting configuration, and especially watching, being able to watch this thing unfold as we go forward here. Let's look at the algos real quick. So this is the other thing that I've been discussing. We're looking at right into the first week of October is where the peak momentum will be, and then we have a potential for inverted V top on a weekly on the the top indicator, which is PPM1, which stands for price pressure momentum. So we're looking at the angle of attack here. This is going to be a key point, but that's at the end of the first week of October, so that's next week. So we're likely to do something. Yeah, butterfly pattern. But whenever you get those kind of swings like that, if I were to take the time and put an Elliott wave count on there, we've got an expanding triangle, which some people call a bearish formation. I call it a very bullish formation. Every time I've seen one, there was one early in 1994 before we went into a vertical move on the markets. And I remember telling, I was head analyst at a firm then, and I said, no one's going to believe what's about to happen. This market is going vertical, and everybody was, at the time, you could, this was, pre social media time, no YouTube, none of that stuff was out there in a big way. And what we were seeing then, the chatter on the street was, that the markets were becoming very risky, and I tend to be on the other side, not by design. It's just the way it was, is that I saw a monster rally coming. But the bottom line is we are coming into a period, and then it looks like as we go forward, we could see somewhat downward pressure, but we get into sideways. And I spent a lot of time on the S&P here, but the patterns are the same. The only one that's different is the Russell. So let's just flash up and let's just prove that point. Let's put up the NASDAQ futures. You can see here's a zigzag. The difference is the S&P is making new highs. NASDAQ isn't. The old high in the NASDAQ was here at 20,983, and we're currently at 20,133, where we're just virtually printing all-time new highs on the futures on the S&P. And I've been arguing that the leadership of the market has been changing as well, going from the S&P's year-to-date is a little stronger than the NASDAQ and back and forth. So look, just take everything I said in that, get the Substack letter. By the way, it's $8 a month, and you can sign up for a year, and you get it for like $6.50 a month or something like that. It's like $80 for a year. So get that. I put a lot of effort in that. That thing's become very important to me. So let's just go ahead and speaking of the Russell, let's just flop over to the Russell, and you can see this erratic pattern even more so. Let me back up, go to a day chart here. And this is kind of interesting, because if anything happens here, I think the Russell's going to lead the way down. We should come back into the moving averages. You can see Russell's not projecting new highs. And this has been my argument, coming back over to a couple areas here, just to touch on this right now, is when this happened here, I was screaming that this was a distribution, and anybody that was buying in there was about to get slaughtered. Went all the way back down, made new lows off of the June lows, and all the way down to 200 period. We got another one of these mini distributions, and we have another low almost back to the 200 again. Now we're getting a bit more, and you can see here the algos are suggesting that we're going to be down into mid-October. And like I said, when I showed you the database a little bit ago, I was talking about the financial sector on a short-term basis is very overdone. I didn't bring up the intermediate models, I should have, but the short-term is very overdone, meaning that we're likely to see what stocks are working in the financial sector. And we come back, there are tons of these intermediate, smaller banks in the Russell 2000. So this is a cluster of the old term zombie companies. There's a lot of problems in this asset class. Mid cap is just a bit better. I think it's up 12, almost 13 on the year. Russell's up 8%, and this is a sympathy rally as far as I'm concerned, because there really is no real value in there. I won't have enough time. I mean, I could spend a couple hours. We're already 47 minutes in. I promised to do some stocks, and I'm still on the NASDAQ. So I think what we'll do here is I will make a switch. I want to bring up NVIDIA, because I think that's an important subject. I put it in my headline for tonight on the video, so I got to cover it, or it's clickbait other than that. So I'll do that next. But we'll probably try to wind out of there and see where I come out of on the back end of this. Like I said, we could do a couple areas. TV does have option chains. I believe they do. That's maybe somebody knows the answer to that question. Yeah, so quick question, since we're on this deep dive here. Someone's asking, when the direction of the daily and weekly are different, should they be similar? No, because they're different time series. So here's what could happen. You could have an uptrend in the weekly, but the daily is coming back into the moving averages. So you can still have an uptrend weekly, downtrend daily, or the inverse, where you could have a declining weekly, but then the daily is bottom and it's bullish, trading up into the weekly averages. So one of the things I need to really do for you folks and is to put how to do a multi-series analysis where you're combining daily, weekly, and monthly. I do go through that, but it's random in one of these live streams. So my plan is to try to put some stuff together. I'm glad you said that, James. We do need to look at gold. And so it's actually on my little sheet here that I have. So I've got my little tablet. So yeah, I do have it on there. So let's do this. We'll do gold, NVIDIA. I'll come back up on screen. That's about 10 minutes from now, and we'll kind of call it quits. I see Dan screaming Tesla. Yeah, I'll go through a couple things. Yeah, man, there's so much that I would. I see these are great questions, by the way, that you folks are putting up here. Yeah, the condors are probably pretty good. So how many people ever heard of the wrist doctor? My buddy Charles Cottle. I know he watches the show. I need to. Charles and I need to put something together on condors and strategies, especially when we get into this sideways mess like this, and it just straddles. There's so much money to be made, just boxing these trades out, and I don't really trade options anymore, but I know the strategies. I've lived them for a lot of my life, but the bottom line is when you see this kind of stuff, the things that we're talking about tonight, and especially when vol starts to drop, there's can be a lot of money if you can catch one of those expansions and then start doing some good straddles and some other ideas. So let's do this. Let's go ahead and clean this up. And let's do gold first. We'll do gold, and then I'll do NVIDIA, Tesla. I'm just going to run through them pretty quick. Okay, so if we run over tonight, that's okay. We'll go a little bit longer. So here's gold. Gold continues to, this is daily, it just continues to move higher. We're right at, this is interesting, we're starting to get to those peak levels. And I talked about this, this was yesterday, we got all the way up to the RTX level, which 2689. So this is interesting, folks. If you look over on the right-hand side, we put the cursor there. You look over on the right-hand side, RXT value that was predicted the day before yesterday. So those numbers came up, 2689.60. The actual high yesterday was 2689.40. So it was 20 cents off. So we look at today. Now we're looking at 2690 is R1. So far we've been 88. So I would look for some follow through. And if we can get above that 90 level, then you're looking at, let me just get these numbers right here. If we get above 90, then you're looking at 99, 2709. Uptrend's huge. We've got PPM1, that's the white line, I put my cursor on it. PPM1's very robust, 0.56, big time trend mode. And you can see the algos, the red dot predictors showing multiple higher closes, and this will adjust itself once we get more data. It's showing maybe a softening, but really what we're seeing is this trend mode where we're following the trends. And the middle red line, let's see if I can get this up. Middle red line here has been, I'm just going to see, yeah, hang with me. I'm going to make this fat so you can see this. I'm hoping, yeah. Oh, I did the predictive. Okay, hang on, bear with me. What I want to do is bear with me. Yeah, what I want to do, it's not working. I don't see the setting right away. But anyway, if you look at the 21 period moving average, it's flowing. You can see it flowing through. Almost all the lows were right around that 21. That is when you see this. If we look at the PPM down below, we were in expansion mode. We were definitely in trend mode above 0.25. So what happens when you see this type of configuration? This is kind of a grinding trend, but it's a steady trend that happens. And that 21 period moving average is what I call the primary demand line. So anytime you get close to that line, you can that's where you could buy the dips. They would go through it, but we managed to pretty much close. I'm just looking at this. We closed above that line all the way through this pattern. I don't think we ever closed below it. And that's classic where you see a blip below it. But we're seeing still higher prices here. Let's move this over to so I'm just looking for something real quick here. I'm looking for somebody on the timeline that I've been trying to reach. So I would just say it out loud in case you get this far. It's at the end of the video. Wayne, if you get this in Australia, give me a call. Okay. But this pattern that we're seeing here really is quite bullish from the standpoint of where the algos are just suggesting we're going to go up. This is weekly. We're going to stay in this elevated phase, and looks like all the way into November, we'll just say the week of the election, it looks like we have positive upward slope. We're not likely to get through that. Okay, let's do NVIDIA. I thought this was somewhat interesting. There's some new Fibonacci targets here. I'll bring this up. You can see they're kind of hard to see. They're not real bold here, but there's 3 all-time new high Fibonacci's being projected right now, and those are for moves to 156, 180, and 196, which basically, if we got to 196, that's doubling the value of NVIDIA again from the split at 110. So if you remember, we were at 1,000, we get the split, and now we kind of pulled back a few weeks ago toward this level where we almost got back to the split value. Yeah, we did. We got to 90.69, and then over here is where it all started from, which was 76, and I believe this bar here was a split at 106. That was the week of the split. And then what we're seeing is this is exactly that pattern that I'm showing you here, is that expanding market grid volatility. And this market will not make a major move until we get this really into a smaller cone that will collapse around it. And you can see the algos on the weekly basis are suggesting that we're going to stay somewhat range bound. It's showing that we're going to be below these moving averages, but I think more likely, if you look at the range, you're probably looking at R2 is 122, S2 is 109. So those are pretty big, broad range. You're likely to stay in there. As far as these fib targets up here go, I'll show you this. What I look for when I see, those of you have the indicators, if you have like a fib target up here like this right now, and you look at the PPMs, and they're not showing a big expansion, like we're going to get a big blow up. One of the keys, I just happened to run across a story somewhere after the rally in NVIDIA today, that NVIDIA is ready to go higher again. But I tend to be a bit of a contrarian. I figure if you can read this on Market Watch, it ain't going to happen. So the point is that we're really locked in this range. Not that there couldn't be some more upside. I'll go to daily, and then we'll move on. We'll do. How am I doing here? Right at an hour. So we'll go over a few minutes. Not a problem. So let's go to the daily here, and this is a little more realistic, but I want you to look at the slope here in PPM1, PPM2, slight positive. When you get a new Fibonacci target, you should be seeing the algos predicting that the probability, what this is telling us, that the probabilities are not so much for a rise up into these fib targets. So you can see there's 3 dots right here. Let me bring this up. I'll give you the numbers. 133, 140, 146 off the daily. So that is the upside. That's certainly a swing objective that we have set up here. And do I go here? Yeah, let me just put something up here real quick. Okay, they're not real. They're going to be hard for you to see, but you can see these lines being drawn in here. I put in the WaveTech pattern finder, which marks this low, and basically what we're seeing right now is this. And I won't say it's completely invalidated, but here's what we're seeing. These are the line. I'm just drawing in the lines that the indicator did. So what's happening is these targets up here that I just mentioned, 133, 140, 146, those targets are coming from the swing objective that's being projected from that pattern, okay? So the indicators actually mark all the patterns. It's way better than a zigzag tool. There's actually some pretty decent math behind this on this prediction. So it's actually this tool is used by our cycle finder. It's used by the Fibonacci target, and it's also just if you want to do wave counts, it's like really, really good for marking the key high lows. But the issue is that this is the target that we're seeing here. But let's go ahead and let's just take this off. And what you need to see, those of you who have the indicators, if you don't have them, remember you can go to www.kendallreport.com/indicators, and you can rent to own or subscribe and get a 7-day trial. So make sure you do that. But let's just take this off here and let's go. So what we would want to see if we're like going to get really excited about these upward targets and buy call options, do all that stuff, is probably we'd want to see the algos actually clicking in and that the PPMs we're projecting an increase where we're going to see all the moving averages turn up. But that's not what we're seeing. We're seeing really a flat projection. Doesn't mean that's how it's going to play out. But right now, probabilities tell us that that's how it's going to play out. So what you could do is maybe, do some call spreads, sell that out of the money, buy the in the money, lower the cost. You should be able to put some decent strategies. A lot of times we used to do ratio trades 2-to-1, all that kind of stuff. Just depends on the capital if you can go naked on some of the strategies. But the bottom line is they probably want to hedge this trade unless we start to see an increase. What we're seeing is that this is probably, we'll call it a false breakout here. And if anything, maybe it gets up to fib target 133. That would be a decent number to get to. We're 120. So that's $13 run. Not a big deal, right? That's like 1 day, 2 days. So that's certainly a possibility, but we're not seeing the big increase in from the algos, but we are, just last mention, as we do have a 1.10 momentum, which is very strong. So even if we drop all the way back, yeah. So what it's saying is as we come into Friday, momentum's likely to pull back. We'll see what's going on here. Like I said, just the analysis that we did on the indicators on the S&P earlier does suggest there's still some vulnerability here as we're trading right at all-time new highs. So let's do Tesla. This is the daily Tesla. So we have sort of interesting here. Let's back up a little bit. If we come over here to September 4th, we got Fibonacci targets on Tesla. Let me get this over here. 248, 266, 277. And this is a bit different. You can see that PPM1, it was in an expansion phase. So we had upward fib targets, expansion phase, and even in general sense, the PPM2, which is the red indicator, each one of these indicators are coded to the moving averages. So I use 10, 21, 40, and 200. And so the 10-period moving average has been expanding along this line. We've continued to print up on Tesla at the RTX number. And we did get right over here back on September 19th, we got an RTX sell signal, which means 1 to 2 bars sideways. So we actually got 1 bar sideways to down, and this is daily. And then we get the expansion. We trade right up to the right now 247.91. Let's see how this prediction went. So the 257.19 was the high. 259.42 was RXT for today. So we've almost printed up to RXT yesterday. Let's see here, 250 close, the high 250 exactly, and RXT 247.91. Typically that suggests that we could get sideways movement here. We're following through. This was yesterday, so we followed through on Tuesday. But it looks like we're probably going to flatten out. We've already met fib target number 1, right? Remember that was 248, so we printed 250. Next level, 268, 277, still in play. So all these are valid numbers, and then the only other thing we can do here is to come over here and print up the weekly. And a couple interesting things here. I know people. I actually like Elon Musk. I think he's amazing, but I'm always calling Elon what it is. He's the best vaporware salesman in the world. FSD, robo taxi, going to Mars. He's good, man. He's good. He can pump them with the best, and gets away with it. But we do have on a weekly basis 3 fib targets. And we're going to make a full analysis, then we'll end here. So we're looking at 285, 325, 349. That's where these objectives up here are, where the green dots are. Let's just look and what we're seeing. So this is what you want to look for. We have upward fib targets. We have the predictive indicators are saying that we're seeing trend expansion to the upside. In the case of where I just put my cursor, we're about to cross first and second derivatives on the PPMs. On PPM2, we did that. This was where a lot of times the breakout, we got the first signal. Let me draw this in. You folks need to see this. So we got the first signal right here where we crossed in this area here, first, second derivative. We got another crossover here, and then we got a crossover here. Let me get some arrows and I'll show you exactly where to locate some of these signals. So here's where PPM1 was signaling that going through the first, second derivative. PPM2, and then right here, PPM3 on this breakout. So this is what we got here. We've got this, and it's hard to see. I wish I'd made those lines a little thicker on the WaveTech pattern finder because you could see, but where I drew in the arrows, that's exactly where the pattern finder is. So now what's happening is these projections here are coming off of this pattern. So you get a little minor pattern like this set up. And that's why when we're on daily, we were seeing incremental projections coming out of the daily. Okay, so that is, that's a pattern that's unfolding here. And we should be able to do something else here. Let me clean this up. The never-ending live cast tonight, but let's just go here. Let's put out here, and just I want to see something. So this is a weekly Tesla. I need to flip it over to this model. So Tesla is long at 254. It's up 42.91. So that, even though it backed off, it's held in here. So what we're probably seeing is the potential of these retests of these numbers. So this is the weekly. I just want to see where we are in NVIDIA as well. Since I covered those, just want to see how the modeling, what it's looking at there. Would help if I get the symbol in right. Bear with me. Yeah, let's just see. I just want to see if we're getting any signals yet here on 1.2. Yeah, so we have a long, it doesn't have much. It kind of got sucked in here, but we did get out of this trade. If I come over here and look at the model results, you'll see the trade log. We actually, this is daily. We had the last three trades. We basically made 0.5%, then we made 82%. We bought it at 49, sold it at 98. Then we bought it 87, sold it 121, and now we bought it at 118. So I just wanted to kind of cover that stuff. All right, folks. Hour 12. We got through it all. Yeah, I just did Tesla, so you can probably back up the stream if you want and get that. Just looking at, yeah, so you can use actually, if you get the pro version, let's talk a little bit of TradingView. If you get the pro version of TradingView, you can, I think you can put up to 10, maybe 12 indicators at one stage. So when you see my screen up here, you're actually able. So what I have on the screen right now, let me just go over here. Yeah, what I have up here right now, I have 10 indicators up here right now. So I've got the forecast. I've got, I can actually put the webs on, and then we even have the, just looking here, yeah, so, but yeah, so you can put quite a few of these things up. I have the pattern finder, all that stuff is up there. So, but this, what do we got up here? Tesla yet. But you can see Tesla's got a pretty nice pattern up here. So much I need to teach you Padawans. But anyway. Yeah, so I see Captain Jim up again. He's a friend of the channel for sure. Yeah, so folks, I would say read the Substack. I'm going to take a few hour break. I'll be up to about 4 or 5 a.m. Eastern time writing the newsletter. I know folks wish I do it earlier, but I have a couple of projects that I'm working on. So I love being locked in at night. So anyway, appreciate everybody showing up. Yeah, they're in the invite only. Yeah, that's where they show up. So here's the deal. So if you decide to go out and try our new process where you have a 7-day trial, let's see here. Yeah, so here's the link and stuff. But if you decide to get the indicators, you can definitely. go out and you can get rent-own, best deal out there. You can buy them outright. It's actually a little cheaper to buy them outright. As subscription, you can do that if you just want to try them for a while and you just want to cancel a subscription, that's fine. But the rent-to-own is best, $37.25 times 12. That gets you there. It's right at, I think, $497. It's $447 if you buy them outright, and then you can lease them forever, which is actually not a very good option because you're better off. But if you just want to try them for a while, you certainly can. And if you do that, you can send us an email. We'll figure out how to settle with you and get them in your permanent possession. The goal is to get these things out there in the world and to keep everybody going. So, yeah. So, yeah, James, I appreciate you guys back as well. Yeah, it's a lot of times it's about 2 hours after London market open. I'm sitting here. I watched London. There's been some awesome trades. I've always been up around that time. Right now, I'm in Arizona, and we don't change our clocks here. So the issue that I have is that half of the year we live in California, half of the year we live in Denver. Okay, and so when the clocks change, it'll be an hour later before the market London opens. Good news is I'll have the newsletter out much closer to the London Open then because of the time change. And I think that happens at the end, very 1st of November, if I recall. Maybe like really early, like no 2nd or something like that. But when that happens, then that will move my efforts out, and I'll probably be closer to hitting the London Open. So those of you in London will be thrilled. I've had a bunch of emails from everybody. But anyway, folks, that's where to get them. KendallReport.com/indicators, and got a lot of stuff we want to do for the community. So we shall talk to you soon. Appreciate everybody hanging out for an hour and 20 minutes, and we'll move forward from here. Have a great evening.